So for this particular session, we are now to talk about your PFRS 5, non-current assets held for sale and discontinued operation. So this particular standard applies only to two items. That is your non-current assets held for sale, non-current asset held for sale, and your discontinued operations. So generally, we have two types of asset here. We have your non-current asset and your disposal group. Okay. So for PFRS 5, we are to talk about your classification and your presentation, including your measurement principles for your non-current asset, which is now held for sale, and your disposal group. Let's start first with your non-current assets held for sale. So for us to determine that a non-current asset is held for sale, what is the requisite for it to become held for sale? Remember, when we talk about your past one, we already determined when is an asset a current asset and when is an asset non-current asset. Now, what we have here in your PFRS 5 is a non-current asset that we will recognize as held for sale. A non-current asset that we will recognize as held for sale. Therefore, our problem is, when can we say that your non-current asset is held for sale? So there are two requisites for you to determine that an asset is held for sale. So the first requisite is that the carrying amount of that asset should be recovered principally through a sale transaction. Sir, what is the carrying value or your carrying amount? Your carrying amount is the value of the non-current asset as reported in the books. So whatever is the reported amount of that asset in the books is called the carrying amount or carrying value. Sometimes this is also known as your book value. So whatever is presented there, that is your book value. Now, if that book value of your asset is to be recovered principally through a sale transaction, you already know what is a sale transaction. So if there is a sale transaction out of that non-current asset, we meet this criteria. So the first criteria, if ever, we will recover the value through a sale. The second criteria is that it is available for immediate sale and the sale is highly probable. Available for immediate sale and the sale is highly probable. So the question is, what is an immediate sale? What is an immediate sale? Generally, we say it is an immediate sale if it can be completed within 1 year from the date of classification. So immediate sale. So we have here non-current asset, and then we determined we want to sell that asset. It is now held for sale. So when can we say it is held for sale? If the sale is to be done immediately. Generally, immediately here under your PFRS 5 is within 1 year from your classification. So once you classify that as your non-current asset and then suddenly held for sale, within 1 year classification, it can be sold. We call it your non-current asset held for sale. Example, we have your equipment. Okay, equipment is a non-current asset. And then suddenly you want to sell it and the sale is immediate and highly probable, then we can say it is held for sale. So PFRS 5 happens once you determine that your non-current asset is to be sold and it will be through a sale transaction that is immediately and highly probable. Okay, so we're done defining what is an immediate sale. Our next problem is highly probable. When can we say that the sale is highly probable? So sale is highly probable if the following are present. First, if the appropriate level of management must be committed to plan to sell the asset or disposal group. Take note, if we plan to sell an asset, we call that your non-current asset held for sale. If we plan to sell a disposal group, this is considered as a discontinued operation. So if you plan to sell your disposal group, it's still known as non-current asset held for sale. At the same time, it is a discontinued operation. So what happens in a disposal group? There is a disposal group mainly, guys, if you sell a particular group of your assets or a group held by your company as principally through sale. So if you will sell them and you will recover them principally through sale, then we call them your disposal group. Later, as we go through, we will discuss what are the accounting treatments particularly applicable to your disposal group. Okay, so we're done defining what is an immediate sale. We go now to highly probable. When can we say that the sale is highly probable? So the first requisite is that the level of management or the appropriate level of management must be committed to plan to sell the asset, meaning there must be a commitment to really sell that asset. It is important for you that there is really a sale transaction, but then it is another way for you to look whether you are really committed to sell that asset. For example, you want to sell that asset, but you don't really commit to sell it, then can we say that the sale is highly probable? If ever you just want it to sell, you just want to sell, but you don't really intend to sell it, meaning there's no commitment for you to sell it, then there's no sale at all. Kaya hindi na siya highly probable. So kailangan daw may commitment ka to sell it. Next, there must be an active program to locate a buyer and complete the plan must have been initiated. So this is another way for you to say that there is a highly probable. Aside from being committed to sell it, of course, you must find a buyer for that particular asset. So although, take note, we must first recover it through a sale transaction. When we talk about a sale transaction, there must be a seller and a buyer. So although we have a committed seller, if there is no active buyer, there is no sale transaction. Because for us to consummate the sale, there must be both the buyer and the seller. So the first one is for the seller. The second one is for the seller to look for a buyer. Third one, the asset or disposal group must be actively marketed for sale at a price that is reasonable in relation to its current fair value. So the important words here are actively marketed for sale. So you should also market your asset that is held for sale. So remember, you have non-current asset. Now you identify it as held for sale. Once you identify it as held for sale, you do these things. You actively market it for sale. So that is for either marketing costs, advertising costs that you are selling your non-current asset. Fourth one, the sale should be expected to qualify for recognition as completed sale within 1 year from your date of classification. We already discussed this within 1 year rule. That is your immediate sale. And actions required to complete the plan should indicate that it's unlikely that significant changes to the plan will be made or that the plan will be withdrawn. Okay. So initially, we have here your plan to sell. And whenever you have a plan to sell, you have a commitment to sell that asset. So what we need to look in your number 5 is that once you have a commitment or plan to sell that asset, you must work on the plan. There must be no significant changes such as a withdrawal or as to the length of time of selling it because we must do our sale within 1 year from the date of classification. So in case we have a non-current asset held for sale, take note, once you have an active plan, you should do that plan. You look for a buyer, you market it at a particular price. Take note of the price must be based on the current fair value. When we talk about fair value, what standard goes into your mind? That is your PFRS 13. And we're done with that. Okay, so what we need to look here in your standard, again, a non-current asset, and you will recover it principally through a sale transaction. And the sale transaction is an immediate sale and highly probable sale. So other issues as to your non-current asset held for sale. The first issue is, what if you have a non-current asset acquired with a view of subsequent disposal. So what do we mean here? So for example, you purchase a property, plant, and equipment. So you already know that PPE is a non-current asset. So what if you purchase the PPE and you view it to its subsequent disposal? Okay. The question is, how to present it? Is it PPE under PAS 16 or is it non-current asset held for sale? Okay, we go back to our issue. The issue is you purchase a non-current asset with a view of subsequent disposal. When we say subsequent disposal, ibebenta natin, tama? Okay. Ang tanong dito, ano bang gagamitin natin? PAS 16 ba or non-current asset held for sale, which is PFRS 5. Now, what we need to look is if ever the PFRS 5 requirements are met. In short, if ever there can be a sale within 1 year, this is the 1 year requirement, the immediate sale, and then subsequent, if ever it is a highly probable sale. If the two are present, then non-current asset held for sale. If not, it is PAS 16. Take note of this. Okay. You have a non-current asset acquired with a view of subsequent disposal. Now, your problem here is how do we present it? Is it PAS 16? Is it PFRS 5? So we look into if ever the requirements of PFRS 5 are met. What are the requirements? To recognize a non-current asset held for sale to recognize a non-current asset as held for sale, we have these requirements. First, there is a sale transaction. We have no problem with that because there is a view of subsequent disposal. This is a sale transaction. The second problem is that there must be an immediate sale and it is highly probable sale. So you need to take a look at this non-current asset. If ever you can sell it within 1 year and it is considered a highly probable sale. If these two items are present, then account for it under PFRS 5. If not, you account for it under PAS 16. Okay, for example, ABC company purchased a property amounting to 500,000. ABC intends to sell the asset in the near future. However, ABC does not have an active market or ABC does not look for an active buyer. Question: how should ABC present the equipment or that property? Okay, we go back. ABC purchased a property with a view to sell it in the near future. However, ABC does not market actively the asset or does not look for an active buyer. Now, our question is, how should we account for that property or for that equipment? Is it PAS 16 or PFRS 5? So we look into the requisites. Do we have a highly probable sale? No. Why? Because there's no looking of active buyer and there's no active marketing for that particular asset. So it is not a highly probable sale. Therefore, account for it under PAS 16. Okay? Next. Next issue, requirements met after the reporting period. So we have here non-current asset. What is your reporting period again? That is your date of reporting or the date of your financial statements. So let's say your date of financial statements is December 31. So we have your non-current asset. Requirements met after the reporting period. So after the reporting period, pwede na raw siyang non-current asset held for sale. So what is the treatment? What is the treatment? Okay. So if ever your non-current asset held for sale requirements are met after the reporting period, you should not present it under PFRS 5. You should still continue presenting it using your old standard. Okay? So whatever is your standard used to measure that asset before, even if after the reporting period you meet the requirements of a held for sale, it will still not be represented as PFRS 5, but you will use it under your old standard. Okay, for example, you have an investment in bonds measured under PFRS 9. That investment in bond is considered a non-current asset. So let's say investment in bond, non-current asset measured under PFRS 9. Now, after the reporting period, let's say February 7, on February 7, you met the qualifications on that investment in bond for a non-current asset held for sale. Question: can you account for it as a non-current asset held for sale? The answer is no. Because sabi natin, even if you meet after the reporting period the requirements of PFRS 5, you continue using the old standard with that. That is PFRS 9. Another example, you have a property, plant, and equipment measured under PAS 16. On February 7, you met the requirements of a held for sale. Question: how should you present that particular property, plant, and equipment? PAS 16 or PFRS 5? Answer: not PFRS 5, but we continue using the old standard, that is your PAS 16. Okay, so we're done with two issues. The first issue, non-current asset acquired with the view of subsequent disposal. Answer: you need to look whether the requirements of PFRS 5 is present, then PFRS 5. If not, then whatever is the standard applicable. If that is PAS 16, PAS 16. Next, there is a non-current asset and the requirements met after the reporting period. What is the answer here? You continue using whatever is the old standard used on that particular asset. Okay? You will not measure it under PFRS 5. Next, what if you classify your asset as abandoned? Non-current assets abandoned. Okay. Since it is abandoned, therefore it is not PFRS 5. Because in PFRS 5, what do we look? A sale transaction. Here, you abandon it. So when we say abandon it, you still use it for a continuing use. You still use it for a continuing use, although it is already abandoned. When we say continuing use, andun lang siya. Although you are not actually using it, the continued use is because it is still there, although abandoned. So since you will not recognize it or you cannot get it for a sale transaction, then not PFRS 5. So how do we treat it? How do we treat it? You still use the old standard that applies for that particular asset. Okay, we go back on our rules. So if ever we classify a non-current asset as held for sale, what is our standard? PFRS 5. When can we say it is a held for sale? If ever you can recover it through a sale transaction and the sale is immediate and highly probable. What are the requirements of highly probable? You have an active seller that is committed to sell that asset. You look for an active buyer. You market it at a particular price. The sale can be done within 1 year. And there should not be intention to change those plans significantly or you will withdraw the plan to sell that asset. Once those requisites are present, then non-current asset held for sale. Issues: acquired with a view of subsequent disposal. Check if ever you meet the PFRS 5. If you meet the PFRS 5, then account under PFRS 5. If not, use the standard that is used on that particular asset. Next, if the requirements are met after the reporting period, whatever is the previous standard used on that asset will still be used, even if it's already held for sale after reporting period. You will not use PFRS 5. Take note on the second one, non-current asset. You have a reporting period in between and then suddenly you meet the held for sale requirement. So even if you meet the held for sale requirement, as of the reporting period, you did not meet the held for sale. So after lang. So since it is after, you do not use PFRS 5, but you continue using whatever standard you use on that particular asset. Next, non-current asset is abandoned. Abandonment is not sale. Remember, in your held for sale, for us to say it is held for sale, there must be a sale transaction. Since there is no sale transaction on a non-current asset that is abandoned, you do not use PFRS 5, but you use the standard applicable on that asset. Okay? So once we know already when can we say it is a non-current asset held for sale, then we should measure it. Just like any other standards, we start with your recognition criteria. Now, in your non-current asset held for sale, what is our recognition criteria? If it can be recovered through sale transaction and it is for immediate sale and the sale is highly probable. That is our recognition criteria. Now, our measurement criteria. For your measurement, we have your initial and subsequent measurement. So, for your lower of carrying amount and fair value less cost to sell, this is your initial and subsequent measurement. Okay? So, guys, remember this. For your non-current asset held for sale, the measurement is always the same. The lower of carrying amount versus fair value less cost to sell. Okay. FV LTCS, FV is your fair value. LCTS is less cost to sell. Okay? You already know what is a fair value. You already know what is a cost to sell. Just always measure it at the lower of these two, whether initially and subsequently. The question now is your reporting of gains. Because since you compare your carrying amount and fair value less cost to sell, there can be a chance that there is a gain and there is a loss. If there is a loss, loss is always recognized. But how about gain? How do we recognize the gain? The gain on your fair value less cost to sell changes is recognized only up to the extent of your impairment loss recognized. So for example, you already recognize 300,000 impairment loss. And then suddenly your carrying amount is only 1.8 million and the fair value less cost to sell now is 3.5 million. Okay. So if ever, what do we do? Can we recognize the gain up to the extent? No. We can only recognize the gain, guys, up to the extent of the impairment loss of 300,000. Take note, loss is measured always, while your gain is subject to this rule up to the extent of your impairment loss recognized. Further, since this is a non-current asset, you already know that most non-current assets are depreciated. Since it is already held for sale, there will be no depreciation. So for example, PPE. Dati, nagde-depreciate ka. Now, once you satisfy held for sale, you will not depreciate. Okay? So depreciation of your non-current asset will cease at the time you will recognize it as held for sale. Okay? So the entity shall not depreciate nor amortize the non-current asset once you recognize it as held for sale. Now, what if there is a change in classification? So we have here non-current asset. You measure it as held for sale under PFRS 5, and then suddenly you go back to non-current asset. Question is, how do you measure it? Okay, ang nangyari, di ba? Non-current asset siya, na-satisfy mo yung held for sale requirement, edi nag-PFRS 5 ka. Ngayon, nag-iba ka ng plano, binalik mo siya sa non-current asset. Ang question now is, how do you measure that change in classification? So to measure it, you measure it the lower of the carrying amount of the asset should there have been no classification as held for sale. So in short, as if no change in classification. Okay? So whatever is the carrying amount, as if there is no change in classification, that is this value versus the recoverable amount. Okay. Again, you have a non-current asset. If you classify it as held for sale, what do you use? PFRS 5. Suddenly, you change the classification of held for sale. So you place it back to non-current asset. The problem is, how do you measure it? How do we measure the lower of the carrying amount as if there is no change in classification and the recoverable amount? So the lower between the two. Okay? Clear? We go now to the second part of your PFRS 5. So the first part is your non-current asset held for sale. What did we learn on the first part? First, we need to determine if that non-current asset satisfies the requirements of a held for sale. Once it satisfies the requirement of your held for sale, then we use your PFRS 5. So under PFRS 5, how do we measure it? It is the lower of carrying amount versus fair value less cost to sell, whether initially or subsequent measurement. Now, our problem is how do we recognize any gains or losses because of recognition of the lower between the two amounts? Gains are subject to the limit of your impairment loss recognized, while loss, there is no limit. Further, that non-current asset will cease depreciation. So there is no depreciation once it is considered a non-current asset held for sale. Further, if there is a change in classification, how do we account for the change in classification? We account it at the lower of your carrying amount should there have been no classification change from non-current asset to held for sale and your recoverable amount. So lower between the two. We go now to the second part of your PFRS 5, that is your discontinued operation. What is a discontinued operation? There is a discontinued operation if ever you have a group which now is classified as held for sale. A group that is classified as held for sale. So what is that particular group? That group can either be a separate major line of business or a geographical area of operations. So for example, your company is Jollibee. So Jollibee is spread throughout the world. Let's say you have a Jollibee in New York. And then you will now discontinue or sell that particular Jollibee New York. How do we classify then the Jollibee New York? We call it a disposal group. Disposal group. So a group can either be a separate major line of business or a geographical area of operations. Our example a while back is a geographical area of operations. How about if, let's say, uh, C group of companies. When we say C group of companies, that is a different line of business. Let's say they have textile, they have restaurant, they have automobiles, they have fuels, etc. So when we say we have different kinds of industry, so textile, automobiles, fuels, so those are separate major line of business. If you will sell, let's say, your textile industry, then that textile industry is considered disposal group. Okay? So we have a group now that is to be classified as held for sale. What do we call that group? Disposal group. And the business, discontinued operation. Another discontinued operation or disposal group, if ever it is a part of single coordinated plan to dispose of a separate major line of business or geographical area of operations. So now it is only part of your plan. So if it's included as part of your plan, it's still considered as disposal group or discontinued operation. Lastly, if it is a subsidiary acquired exclusively with a view to resale. Do you still remember what is a subsidiary? Subsidiary happens if there is a parent subsidiary relationship, or this is on the part of your consolidation. So business combination, remember, under PFRS 3, we discussed this during your conceptual framework. And then once you have a business combination, you prepare a parent subsidiary relationship, presence of control. So if you have a subsidiary, you purchase a business, you intend to sell, we call that as a disposal group discontinued operation. Okay. So what are disposal groups or discontinued operations? These are your components of your entity which has been disposed of or is classified as held for sale. What are these component of entities? That is either a separate major line of business or a geographical area of operation or a part of that plan to sell that particular major line of business or geographical area of operations, or it is a subsidiary acquired exclusively with a view to resale. Okay, here, just imagine that you have a separate business that is a group, then you will sell it. So that disposal group, we call it disposal group, And then the operations on that particular items are called discontinued operation. So how do we account for that? So the presentation in your, what do we call this one? In your income statement will be single amount only. So when we talk about your single amount presentation, we add the post-tax of your discontinued operation and any changes in your fair value less cost to sell and your carrying amount. Okay. So we have now a disposal group. This disposal group is known as your discontinued operation. Question now in your presentation is how will you present that disposal group in your statement of comprehensive income? So the profit or loss on that disposal group is presented as a single amount. So the single amount is your profit or loss, so post-tax already, and then any changes as to your gains or losses on your measurement as to your carrying amount versus fair value less cost to sell. Sir, where did we get the measurement of your gain or losses as to carrying amount or fair value less cost to sell? Remember, guys, that your disposal group is still a group of a asset. And this group is considered a non-current asset. However, it is now held for sale. Kaya lang natawag siya na discontinued operation or a disposal group. Kasi nga, kanina, isang asset lang yung binibenta natin. Dito, yung buong group yung binibenta natin. Kaya ang tawag ay discontinued operation. Ang problema natin, how do we present the effects of that particular disposal group? Because you remember, you need to consolidate Since it is already discontinued operation or a disposal group, how do we treat it? So we treat it by presenting a single amount only. And the single amount is composed of your profit or loss of that disposal group, that is post-tax, meaning after tax, and then the gains or losses on measuring that held for sale between your carrying amount and fair value less cost to sell. Okay, take note. You present it as a single amount. And how do you disclose it? You disclose it as part of your analysis on that single amount presented. So you disclose the items on that single amount. So in your profit or loss, of course, you disclose the revenue, the expense, the tax, and the amount of your gain or loss, etc. Okay? So presentation, that disposal group, whatever is the results of the disposal group, is presented as a single amount. So the profit or loss at post-tax, and the gain or loss as the changes on your carrying amount and fair value less cost to sell is presented again on that single amount. So single amount, pinagsama mo yung dalawang yan. What will you disclose? The analysis of that single amount. Therefore, what items are disclosed? The revenue on that particular discontinued operation, the expense on the discontinued operation, the tax on the discontinued operation, and your different gains or losses on that discontinued operation. Okay? So, take note, discontinued operation is still held for sale. However, one unique characteristic here is that it is a group. It is a group that we sell, not only a loan asset. A while back, loan assets, but here, the group that we sell. How do you still measure it? Whatever is the rule on your measurement applies to them. So, initial and subsequent still carrying amount versus fair value less cost to sell. So that's it for your PFRS 5. We look into the accounting of a non-current asset that is considered held for sale and a group that is now discontinued because it is classified as held for